Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, June 10th, 2019, about 4:40 p.m. Central Daylight Time. So an update today, and obviously the reason for that was what? Mexico. We didn't have a tariff war yet with them. As I understand it, there's timelines in the agreement that I haven't had a chance to read, and I don't think you have. I haven't seen the whole agreement out there. But we're seeing people from Mexico, the president, other people talking in America as to what makes this up, and there's certain goals that have to be met for the agreement not to be, if you will, thrown out. So we'll see if Mexico can live up. They claim that they're sending this week, could be as early as tomorrow, 6,000 troops down to the border with Guatemala. Then they're trying, and this is the smart part, I think they're trying to get Panama and Brazil into an agreement where they can find homes for these people and give them a better lifestyle. Maybe the U.S. contributes to all that. Why not? It's cheaper than having all these immigrants come in and just we're taking care of them. They go to court, they're let loose into the system, blah, blah. All right. So as we take a look at the S&P 500, we got up to 2947. We had a break, as you can see right here, to as low as 2752. And these are closing bases. So you had about a 100-point break, and you've added back pretty good size rally here. What did I say that was? If we come down here, I said 100. It's about 200-point break, and you've made up about half of that. I was saying math's wrong there. So a nice correction. The question is, does the market go through that high or stop down? This is going to be an important area. And of course, we have the Fed meeting coming up now, so we're going to get our interest rate policy. On the daily chart, we certainly were, with this rally, able to get over these previous highs. We cleared that area. But does this set up the possibility of what we call that Tuesday reversal? I don't know. And the reason I mention it is if you look at the open, you opened at 28.93. Yeah, I know you rallied a little bit higher, but all the action in this particular stock index was on the open, and then the market closed under the opening. It's not the best sign of strength. When we take a look at, are we trending? We're not. We have a lower low, higher high pattern. So we're getting one of these vertical moves. This was an easier call. Lower highs, lower lows. This is a reaction to that big break. In terms of moving averages, I see two levels of support, 28.29, let's call it, and 28.15, the 18 and the 100-day average of closes. If those were to let go, then you've got the 200-day average of closes. As you can see, you slid through those averages down here, but you came back with a vengeance right back over them. Why I'm wondering if tomorrow's not going to be one of these days where the market gets that Tuesday trying to reverse is you're coming up to the upper Bollinger Band. And my theory is the first time that the market hits those numbers is often a spot where the pros take some money off the table. So that's why I'm saying what I am, and you're overbought. So I add those together, and that's what I'm seeing right here. Then I go to the NASDAQ, and on the NASDAQ, you've got a lower low and a dramatic higher high. Of course, it's being influenced by some merger talks that were going on today. You've got you've got the 18-day average over the 100. Here's what's interesting. You can see how they were trying to come together. This is what I call skirting the average, and it's cleared it right there. But again, that upper Bollinger Band in an overbought condition, I think if you got there, I'd look for the pros to take some money off the table. You hit it in the Dow today, and you backed right off, as you can see, with a lower low, higher high, and a vertical price rise in an overbought market. Unlike the other averages we showed you, the 18-day in red is still under the green, the 100-day. That's not a true bullish setup on just moving average theory. In the Russell, I see resistance just above the market in the 100-day, the 200, and the upper Bollinger Band. So I would not be surprised if these markets, if they do get up, the possibility of by late in the day the market being down a bit could happen. Am I predicting it? It's not what I do here. I'm pointing out what could be. It's called the Tuesday reversal. In the VIX, you slid down last week, hit the 100-day average. Now in this rally, you're trying to challenge back to the 18-day average, that resistance point. I'll stick with my idea, though, that if you hit the Bollinger Band bottom or the Bollinger Band top, be it the call writers or the put writers, will come out trying to get the market back to that 18-day average. You haven't done it in a while. You haven't done it since this part of May. We'll see if it can do it, if you get a move of substance. In the T-bond market, you still have the embedded reading. Until it's lost, I contend that the pros are still buyers. Lose it by getting the red line under 80, especially on a week going into the FOMC meeting now. I wouldn't be surprised if price tries to retreat some of that yield that it took off, putting it back on. It's what you were doing today in the 10-year note. And if you open steady to lower tonight, you're going to lose that embedded reading here, which puts in play the possibility of price wanting to retreat to that 18-day average to regroup. Any way I go about this, though, you have a lower and low, higher high pattern. You stepped out of that uptrend today. As I look at TLT, you lost the embedded reading. When you lose an embedded reading by the red line getting under 80, and an embedded reading is when in the slow stochastic, I don't know why these stock ones are making me redo this. It's when both numbers were going over 80 in the slow stochastic. And when that pattern is lost by the red line closing under 80, it's often a lead indicator that price in the closest of the key moving averages, in this case, as you can see, it's the 18 on this chart. I think they often try to make a run at each other, and that seems to be possibly what's going to happen. Again, we'll see if that works out or not, but I certainly have the indicator rule that says it. In the dollar index, as you know, on Friday, we fell back to the 100-day in the lower Bollinger Band, and you got back over it today. The trend is still down, but you're in very oversold condition. You've hit some downside targets, be it for a lot of traders, the key moving average, the 100-day average, combined with that lower Bollinger Band. The Bollinger Band number was hit here. The market's still under it, but by not a lot. In the euro, it's the flip-flop of the dollar. The market's having a resistance problem at the upper Bollinger Band in an overbought condition. It made its run at the 100-day average on Friday, and it's slipping back. That doesn't mean it's bearish. The trend is up. You're just overbought here, oversold in the dollar. In the British pound, you're again without a trend. You have a higher high, lower low, battleground, the 18-day average of closes. It's anybody's guess who's going to be the next prime minister. Miss May is now a caretaker PM, and who knows what's going to happen with Brexit. It's still very much up in the air. In the Japanese yen, if we take a look here, both numbers were on Friday over 80. They were not over 80 on Thursday. So all we've had is an overbought market that's in a bit of a correction mode right now, probably in part losing some of the premium that was put on last week going into the Mexican tariff situation. And then the last part of the week, the market really started to ease off quite a bit. Something else here I want to show. You had a market that had an outside day up. You took out the low with that. Often, what I teach in my charting course, when that happens, price and the key moving average, the closest one, try to make a run at each other. So I've got the 18-day average as a possible downside first target. In Bitcoin, while momentum is still pointing down, the market has accomplished, it's had lower highs, lower lows, and it doesn't seem to be able to gather any downside real thrust just yet. It could, but you negate the downtrend if you take out Friday's high of 81.75. So the battleground right now seems to be that 18-day average. If the market can take that number out and close over the 18-day average, you could restart the uptrend actually. In crude oil, you can see the differential between Brent and WTI peaked out up here in the 930 area. It's been slipping back a little bit, but it was interesting today. I was surprised to see the energy markets just fading. Maybe it's because they lost their embedded reading. You see this right here? This was Friday's action. So you had an embedded reading that was lost, and I was thinking the market could get up maybe and make a run with the news that at least the U.S. can make a trade deal, can honor things, we hope, and we're not going to see that world slowdown with Mexico. Now we're just fighting our Chinese battle. The market didn't buy into that. The market backed off. I'll still stay with the idea that when you lose an embedded reading, you get a turn of the cycle of the momentum. We'll see if the market can get a rally in the next day or so. The same thing is happening now. That was Brent. If you take a look at WTI on Friday, you did not lose the embedded reading. You didn't lose it today. So it's Brent that lost it, not WTI, which is still in the overall bearish pattern that says this is just a bear market rally and the market could fade from here because this rules the day. Now, if you lose the embedded reading by the market getting and staying over 20 tomorrow in the red line, it's called the K line, then I'll have a different opinion, and then I get both of them saying there could be more upside. If you believe in the concept, as I do, that momentum often triggers price. It's not the other way around. In Reebok gasoline, you still have the embedded reading. The market's got the lower highs, lower low pattern. I don't know if it's going to drop from here. We're going to get our API numbers at 3:30 in the afternoon. I think they come out at 3 if you buy the API service. But at 3:30, the public gets them. And, of course, on Wednesday, we get the EIA numbers. In Nat Gas, you were up a fraction, but you still have the embedded reading and the weather forecast. I'm just not seeing heat, be it in the key Midwest areas or be it the New York, New Jersey, any of those areas that consume a lot of natural gas for air conditioning. So it's been ideal, and that's weighed on this market. Might be time to start moving away from the July also into the next trading month. We write about this and a heck of a lot more with our Linn research. So be you an energy trader, be you look at the stock indices, want to feel for what it is. It's not only our research that we write, but if you have our trading platforms, you can hear what we're saying during the day because our staff of research, they are broadcasting all day. If you watch David Hightower, he's on our broadcast several times a day, his company. So you can hear all this besides getting an email of the research. And by the way, if you miss one of the recordings, they're all archived right there within the charting software. So if you'd like to try out to this or the charting software package we have, all you need to do is give us a call or go to our website, sign up there for the free, that's the keyword, free trials, and we'll take care of it. I'm Ira Epstein. You have a great day. I'll see you tomorrow.